Well, Trump has once again blindsided markets. But is this the beginning of the end, or just another blip in the overall move higher? So hi there everyone, welcome to the Traders Circle Weekly Market Update. Today is Tuesday the 14th of October 2025, and before I get started, you do need to be aware that whatever I say is general advice only. So as I mentioned, a huge shock from Trump in the form of a new tariff, or an increase in tariff on China. He's lifted it from 30%, and he's threatening to lift it to, 130%. He's threatening that he would introduce that on the 1st of November. Now, the Trump administration made these announcements on Friday, and US markets tanked. They reacted extremely negatively. They fell close to 4% across the three major indices. Very, very negative response. Huge move lower in markets that had otherwise been, pretty comprehensively grinding higher. So it's a huge negative reaction to that. And over the weekend, perhaps that caused a bit of worry in Trump. So on Sunday night, Monday Australian time, Monday morning, he wound it back a bit. He basically said that, they didn't want to damage the Chinese economy. The Chinese didn't want to damage the US economy. That President Xi Jinping was a good man, and that he just made a mistake, and that they'd come to some sort of agreement, kind of implying that they weren't ever going to really levy these additional tariffs. In addition to that, overnight, Monday night Australian time, US Treasury Secretary Scott Bessent said that he was going to travel to China in the next week with the negotiating team, and that they'd come to some sort of deal. So yeah, basically it kind of looks like either this was an oversight, or Trump very quickly chickened out, or perhaps more cynically, that it was an orchestrated or choreographed move, where he called his boys, telling them to sell on Thursday, buy back on close on Friday, and make a quick buck or two. Overall, regardless of what the actual explanation is, it's not a good look. It's sort of fly-by-wire stuff. You really do sort of hope that the world's largest economy, and dealing with the world's second largest economy, you'd hope that they're in sort of more steady hands, but obviously that's not the world that we find ourselves in. Now, US markets fell very strongly, as I said, on Friday night. They did recover somewhat overnight, but only really about half of the losses. So whatever happens this week, it's really hard to say. I think it's going to come down a bit to whether the market, believes everything will be resolved. And it's also perhaps going to come down a little bit to, some of the other events going on in US markets this week. So obviously, the US government shutdown is continuing. It's about to hit the 2-week mark tonight, 14 days. And that's about half as long as their longest shutdown ever, which was during Trump's last term. The longer the shutdown goes on, the worse it'll be. I think, each day that it goes on, it wipes a little bit off the US expected GDP growth. And, if it continues uninterrupted, it's going to dent confidence as well. So, that shutdown, I do think, will start to weigh on investors' minds the longer that it looks like it's going to go on. It's not just the fact that it's been 14 days, it's also the fact that it doesn't look like a resolution is coming anytime soon. So, it hasn't seemed to have had an effect so far. If anything, markets were perhaps maybe a little too negative going into it, and as a result, a bit of sell the rumor, buy the fact. But the longer the shutdown does take to resolve, the worse I think the outcome will be. In addition to that, we've got US company earnings this week. It's a bit of an interesting one, because some stocks are expected to do quite well, and then the majority of the rest of the market is expected to be pretty underwhelming. A lot of the earnings growth is coming from a handful of technology stocks, and a lot of their earnings growth is coming from basically shuffling orders in a circular fashion around each other. It's very, very bubble-like. I don't think it's a particularly good look either for the longer-term sustainability of earnings growth in the space. Instead, they're passing orders from one to the next, to the next, to the next, to the next, and all sort of pumping each other up in a sort of perhaps a more of a pyramid sort of shape. These sort of things never I think eventuate in a particularly good manner. So Yes, the earnings season is coming. The results will have to be very good to justify the current valuations, which are the second highest in history for US shares outside of economic downturn periods, outside of periods where earnings collapse. The only other time that US company earnings have been higher, by most measures, is during the dot-com bubble. And obviously, that bubble went on forever and never popped. So, will be an interesting earnings season to watch. I'm not suggesting that the current valuation bubble will pop during this earnings season. I think that's very unlikely. If anything, I think it'll take, probably at least another 6 months or so. But yeah, those are the other two events going on in US markets this week. In the absence of, any sort of update on the tariff news, I suspect that'll be what decide whether, US shares push back up or sort of break a bit lower from here. For our own market, there are a couple of events to watch this week. The first of which was the RBA statement or minutes, the RBA meeting minutes, I should say, which were released today. I said in the prior update that the last RBA meeting was a lot more hawkish than expected, and indeed today's RBA minutes were a lot more hawkish as well. They didn't talk at all about needing to cut interest rates to stabilize the economy. They didn't talk about a weak labor market. Instead, they talked about the upside risks of inflation. They talked about a tight labor market. As I mentioned, a couple of weeks ago, if you just read the minutes to today's that were released today, you'd assume that the next interest rate move would be higher. That's completely at odds with what the market believes. The market believes that rate cuts will continue. Maybe we'll get another rate cut this year. Maybe it'll be early next year. And the RBA statement just completely out of sync with that. I'm really surprised there hasn't been more of a negative response from the Australian market. I think the Australian market is basically not really reading too much into the words. They're not really going, the RBA is, is going to raise rates next time. Instead, they're going, the RBA is going to come along around to our way of thinking. And that could be the case. There is another important Australian event this week, and that is the Australian unemployment report on Thursday. Despite what the RBA says, the Australian labour market has been pretty weak. Jobs growth has been below expectations for each of the last 5 months. We've seen a little bit of a rise in unemployment, and where unemployment didn't rise, it was because participation has dropped right off. So, the Australian labour market doesn't look very strong, despite what the RBA says in their statements and meeting minutes. I think it's the RBA that's going to be proved wrong, as they usually are, and I think likely we'll see a little bit of a different tone at the next meeting. Although, as I mentioned, it will come down to what that labour market number looks like on Thursday, and it's probably also going to come down to what the third quarter CPI looks like. I believe it's going to be reported at the end of the month, so in about a fortnight's time. Inflation higher than expected. We could see the RBA be proved right, and maybe even the next move on rates will be, to the upside. Inflation lower than expected, and the RBA will probably look to cut again, either late this year or early next year. Again, the labour market weaker than expected increases the chance of a rate cut as well. So let's have a quick look at the charts for this week, guys. We'll start with the US market, the S&P 500, and they have been on a very nice uptrend since April. Pretty consistent uptrend, although I have shallowed out my line a few times. Recently, they found some resistance around 67.50, and they broke below the uptrend line with Friday's strong selling, with that tariff announcement. Now, just because they broke below the trend line doesn't mean they've broken the uptrend. Overall, they still are on an uptrend. They've still got the higher peaks and troughs. The level to watch to the downside to determine whether that trend's going to continue, for me, it's 6,500. If they break below 6,500, that's when we're starting to see lower troughs and then possibly a lower peak. But yeah, we'd need to see 6,500 break. Previously, the all-time high resistance may now act as support, and if that breaks, that's where we might see a period of sustained downwards movement. If the S&P 500 doesn't get to that level or holds above it, I would expect an eventual move back to the recent peak right around 67.50, possibly even above that level. So yeah, watching to see what happens in the coming sessions and if they do break below 6,500. If we have a look at the XJO, the Australian market, and we've also held our all-time high resistance just above 9,000 points. We did fall quite strongly in Monday's session after the strong selling in the US on Friday, but US futures were strongly higher during our Monday session, and as a result, we held the intermediate support level right around 88.80. Again, we tested that level today, and again, we held above that 88.80 level, 8900 level, depending on how you draw it. If we do break below 88.80, break below the 50-day moving average, we're looking likely to move back towards 67.50, which was our low for September. If we break 67.50, then it'll be on for young and old. If we hold above this intermediate support level at roughly 88.80, we would then assume that the next move would be to the all-time high resistance around 9,000. Bit of an interesting point for the Australian market, bit of a decision level here. Like I said, I would assume that the local news is a little bit more negative given how hawkish the RBA is. But for now, the market continues to assume that the RBA will change their tone rather than the economists. So that'll be the one to watch. The other thing to watch in the Australian market is perhaps a bit of a rotation out of all the sectors that have done well so far this year: financials, discretionary, technology. Those well-performing sectors, and into perhaps the forgotten about sector for the Australian market up until August at least, the materials sector. So material stocks going strong. That's with the strength in copper, strength in gold, maybe even a little bit of strength in iron ore, and the better performing sectors for the first half of the year seeing a little bit of selling. So I will wrap it up there for this week, guys. Hopefully you enjoyed. If you did, give us some love in the comments. Click like, click subscribe. We'll see you guys next time.